Good morning and welcome to NDTV Profit. I am Agam Vakil and you're watching All You Need to Know. Over the next half an hour or so, we'll tell you everything that you need to know to start the day on the right note. We start with the headlines. US markets in a limbo again after a stellar rally in 2023. Benchmarks pair yesterday's gains as bond yields continue to edge up. And oil prices stabilized, gained 2% on the closure of one of Libya's largest oil fields and rising Middle East conflict concerns. And India stands out from the rest. World Bank says India will maintain the fastest growth among world's largest economies. And gas prices fall, but retailers may not benefit. City gas distributors constrained by lopsided pricing mechanism. And Boeing CEO Dave Calhoun admits our mistake after 737 MAX 9-door blowout, says company must own up to its shortcomings. Let's start by taking a look at the markets and how things have fared abroad. When it comes to the US markets, it was a very quiet day indeed. And while the Nasdaq managed to perhaps maintain itself in the green, we did see about a 0.5% cuts for something like the Dow Jones. And remember, this comes on the back of significant strength in the session before that. So that tends to question. But we also are bracing for two very important events, even in the US. We'll be watching out for inflation data tomorrow, as well as unemployment numbers, which could perhaps induce some amount of volatility when it comes to the US markets. That said, when it comes to Asia, at the moment, we're looking at mixed cues, not too much to speak for. Otherwise, while we do have a little bit of weakness when it comes to Shanghai and Hang Seng, well, Nikkei, on the other hand, is advancing by as much as 1.6%. And our own markets, of course, may see a slight bit of reaction to the World Bank and its affirmation as far as their growth estimates are concerned. But for now, the Nifty does show an implied open of a negative 40-odd points. But, of course, this is likely to change over the course of the next 1 hour. And today, of course, the open will also be important, considering it is the weekly options expiry for the Nifty Bank. But that's as far as how things are panning out as far as Globe's concerned. Let's get in market voice at the moment. We have Anurag Singh. He's the managing partner at Ansid Capital, who's joining us on the show now. Anurag, good morning, and thank you so much for joining in. Let's start by taking a view of what you think are how global markets may develop over the course of the next few weeks and months, and what sort of an implication could that have on flows in our own markets?
Yeah, Agam, good morning. First of all, I am joining your channel for the first time in the new avatar, right? So, I've grown up with NDTV in India earlier days, and I'm sure it stands for the excellence in journalism that it always does, right? So, good luck to you guys, and it's a pleasure being here. Agam, I think markets, I think we should not read too much into the the not so good last week and not a good start to this week as well. But I think markets usually in January in US, they try and adjust to the changing realities. There is about $7 to $8 trillion of funds, which largely come from pension funds and other wealth assets run by wealth managers, who try and balance the positions every new year as the year begins. So this year, probably because last year returns were pretty good. At Nasdaq, they were about 45%. S&P, they were just about 23, 24%. That is a good year. So, and I think since bond yields are near peak, there is a bit of a balance that markets try and move some money to the debt funds and get a return from there. So I think that's pretty much what's going on. But otherwise, markets have a very strong bullish undertone. And that changed really pretty much on November 14th when the last CPI data came in, and also when Powell spoke in December. And he pretty much indicated that they are open to reducing the rates if the need arises. As it is, the inflation is cooling down. The real rates are more than 2.5, which is more than comfortable for the Fed. So I think that's where, Agam, the markets are trying to balance these two narratives. One is of soft landing, and then other is how much is the pace of rate cuts Federal Reserve has in mind. So that's probably what's going on broadly.
Right. Right, Anurag, I have also grown up watching NDTV Profit, so thank you so much for your wishes here. But I do want to address the World Bank, and it has suggested that we're going to grow at the rate of around 6.3%. That is, of course, the GDP. They have reaffirmed that we will also be the fastest growing economy going into the next couple of years. My question is that at this point in time, if you look at the equity markets, valuations do seem stretched. But I reckon to a certain extent, we are also seeing a lot of participants, trying to perhaps factor in what we can expect going forward over the next couple of years. How are you viewing markets, Indian markets at the moment, and how are you placing your bets here?
Good. So, and I think it is a good point you raise, because US markets are on a different trajectory, but Indian markets are a very different story, Agam. And as we evaluate, I think it's fair to say that Indian markets have really gone a bit ahead of fundamentals. With the elections priced in, almost every sector is priced to perfection. I think minus, I think maybe the financials, which are still okay. But every other sector seems to be pricing in the best of the news that's possible. And I think it's usually, if we go back to history, we realize that if we work with multiples of 45x, 24, 25x at an index level, I think it's very hard to get returns for the next 3 to 5 years from those levels. So I think that's my big caution. And Agam, we know all that, it's broadly driven by the liquidity and the gush of the retail money broadly through SIP and otherwise as well through PMS, AIF, EPFO, insurance, you name it, right? So just about that $40 to $45 billion of fund flow that's coming. And basically fund managers are not at a discretion to park that in cash. They have to deploy. And if they have to deploy, they have to pretty much buy at any price. So my sense is I won't really rush into buy at these levels, any sector in India for now. We would just want to park money in cash. I think there will be better opportunities at some point in time. We don't want to get into, get FOMO'd into this rally. It's priced too much to perfection. Fundamentals eventually will come in and rock the boat, and it's very hard to make returns from there. Now, that said, markets is one side, economy is another. I think what the World Bank has said is very promising, which is that amongst all the global economies, look, they've said the global growth will slow down to like 2.4%, which is fine. But amongst the larger economies, India is doing reasonably well. So I think that's something to cheer. But markets and economy can be not correlated in the short term. We have seen that.
Right. Anurag, just a question on one factor that does in fact tie both the economy as well as the markets, and that is interest rates. At the moment, of course, there's no indication that we may in fact see a moderation in our own markets when it comes to interest rates. But what is your reading? Do you think there is, in fact, a possibility that we could start perhaps seeing interest rates taking off or coming off to a certain extent, if not now, if not over the next couple of quarters, perhaps towards the end of this calendar year?
Yeah, so Agam, the only limitation of RBI here is the impact on currency. So my sense is they would rather wait for Federal Reserve to take the first step, and then the RBI can further follow with the rate cuts in India. I'm sure they can always cut down 25 basis to 50 basis point anytime. But I think they would not like to send the signal that they are ahead of the first Federal Reserve.
All right. Anurag, we leave it at that. Thank you so much for joining us and taking us through your views on the markets. Of course, we will keep an eye on the several factors that you've spoken about. But on that note, let's start by looking at how the markets are placed and what kind of positions are at least traders and some of your other participants placing when it comes to the Indian markets at the moment, when it comes to the derivative space. So at the moment, what we saw was a substantial increase in volatility over the last hour of trade. In fact, that sharp correction yesterday began around 2:15, and from there onwards, we did see a lot of your benchmarks gave up the gains that they had seen earlier on in the session. And even though the Nifty may look like it has closed in the green, there was a substantial correction in the last one and a half hours. We have not seen any change in open interest, but the question remains, where do we go from here? And can we expect more weakness to come through, considering the kind of moves that we saw in the last 1 hour of trade? Moving on to the Bank Nifty, well, we do have weakness there. And again, this one took everyone by surprise. We saw about a 0.5% cut yesterday. The Nifty Bank, or the Fin Nifty, pardon me, was also in focus because of the weekly options expiry. And the sharp cut in the last 1.5 hours of trade has also taken that by surprise. And in fact, more unwinding coming through as far as your open interest is concerned. Remember that a couple of sessions ago, we had in fact seen a substantial increase in OI. So we are seeing some longs and wine. As far as change in open interest is concerned for the Nifty, well, yesterday we saw a lot more writing in the 21,800 and 21,700 calls as well as puts, as you can see here. Well, but moving on, how does that stack up in terms of your overall open interest? Again, the open interest in terms of call, that is the maximum OI, keeps gyrating between 21.7 and 21.8. For now, it is 21.7, indicating perhaps a little bit more weakness in store, at least in the near term. As far as the Bank Nifty is concerned, and that, of course, will be in focus today because it is the weekly options expiry, we are looking at a lot more in terms of call writing as against put writing, which also means that traders, for now, are hesitant to make any substantially large long bets as far as the banking index is concerned. Pardon me. But we now have to keep an eye on several of these factors. For now, of course, we're seeing a lot of resistance around 47,700, 47,800. Let's talk about stocks then. And that's where we did see a lot of weakness. So Polycap continuing to be under pressure. This time we saw a cut of as much as 9%. Dr. Lal Path Labs, Naveen Fluorine, Coromandel International, all of them seeing fresh shots except for Bajaj Auto. And that was largely on account of the buyback which was announced. And of course, Godrej Consumer and Z Entertainment, again, seeing longs and winding. About a short covering for Birla Soft along with Bandhan Bank and Hindustan Copper. But it is going to be a volatile week. Don't forget, we start seeing IT earnings, some big earnings, some heavyweight counters as far as the Nifty is concerned as well, moving into tomorrow and day after. So we continue to keep an eye on some of these factors as far as your benchmarks are concerned. On that note, we slip into a short break, but on the other side, we talk about stocks and a lot more. Stay tuned to NDTV Profit. Welcome back. We put the spotlight on a whole list of stocks which will be in focus today, and let's get in Anushi to take us through that list. Anushi, good morning.
Hi, so the stocks for today we should watch out for is, I'll start off with Prestige Estates first, which came out with its results in the last minutes of the trading session yesterday, wherein it reported about 111% growth in its pre-sales, while it saw a 36% uptick in its collection for the third quarter, while for the 9 months FY24, it recorded about highest ever sales of 16,333 crore, implying about a 81% growth. Moving on to Vedanta, Moody's has downgraded Vedanta, calling the debt restructuring as a default avoidance for the company, and asserting that the creditors have incurred an economic loss on their original promise. The third stock to watch out for is Zee Entertainment, wherein yesterday Zee was the talk of the town after Sony India report suggesting Sony India calling off the 10 billion merger. Over here, we saw a large trade happening yesterday. So just an update on that Society General sold about 83.5 lakh shares, representing about 0.86% equity of the company. Moving on to Bajaj Auto. Bajaj Auto has launched its second electrical scooter as part of its EV Overdrive, which is Chetak Premium, priced at rupees 1,35,000. And lastly, we have Lupin, which has launched a new drug for the treatment of post-operative inflation with an estimated annual sales of about $182 million, and product is eligible for 180-day exclusivity. So watch out for all these stocks for today.
Anushi, thank you so much for getting us those updates and all the stocks that we can keep an eye on today. But the other one, and perhaps the bigger one here, is Datacom. It's announced its earnings. The earnings seem to be weak. Let's get in my colleague Mahima to give us an update on the same. Mahima, what's behind the numbers?
Right, Agam. So as you rightly mentioned, the results do not seem very positive. They're pretty much weak. If we talk about the numbers as such, the revenue is down 15%. The EBITDA is down over 45.6%, and margins are down by 1,300 BPS. And if we talk about the net profits have been down over 59.3%. Now, why is this happening? This is on the back of multiple reasons. First one being that the two biggest business, that is the revenue from casinos and online gaming, saw a very sharp decline, and their hospitality revenue improved marginally by 8%. However, it has not made a very significant impact on the margins and EBITDA, and their expenses have also increased marginally and sequentially. The employee benefit expense took a hit of 9%. It increased by 9%. Also, they were hit by a series of GST demands for short payment of GST. At present, they have lined up GST demand of worth over 23,000 crores, and the tax expenses have also increased by 5 times since December 22. So all these reasons are responsible for the downfall of the revenues so far. And if you talk about the valuations have also been, the PE has been decreasing since FY22, and the stock performance has also taken a hit. It's been down 28% in terms of 52 weeks now.
Right. Mahima, thank you so much for getting us those updates. The question is, how much weaker can Delta Corp become, at least in terms of its share price? It's a wait and watch on that one. But we move on to the next story, and that is NSDL and SEBI have filed an appeal before the Supreme Court challenging the order of the Securities Appellate Tribunal in the Kavi stockbroking case. And we have Varun, who's joining us with more. Varun, good morning.
Yeah, hi, good morning. Yeah, so you rightly said that an appeal has been moved before the Supreme Court by the market regulator and NSDL against the SAT order in the Kavi stockbroking matter. Now, no dates have been notified yet, but it's yet to be seen when it will be taken up. So yeah, a little background on the case. On December 21, the appellate tribunal had invalidated 2 SEBI orders which restrained some lenders from undoing the pledge on shares held by Kavi Stockbroking Limited. Now, the tribunal has allowed the lenders, which included Axis Bank, ICICI Bank, Bajaj Finance and IndusInd Bank, to invoke shares pledged in their favour. Now, Kavi Stockbroking owed these lenders about Rs 1,400 crores as these banks had extended overdraft facilities against shares to it. However, the shares pledged under the overdraft agreement were of clients which had debit balance with Kavi as their stockbroker. Although these shares were pledged in the favor of banks, NSDL, without revoking the share or cancelling the pledge, transferred the pledge of the shares to the clients of the broker. The tribunal said that no revocation of pledge is permitted unless consent is obtained from the pledgee, which is the banks in this case. It said that the action of SEBI and NSDL to unilaterally transfer these shares to the brokers of Karvi stockbroking was wholly illegal.
All right, Varun, thank you so much for getting us those updates. And of course, that's something that we're going to continue to keep an eye on. But moving on, Boeing Co-Chief Executive Officer Dave Calhoun has said that the plane maker must own up to its shortcomings as it grapples with a safety incident that has renewed questions over the quality of its manufacturing. This after the US regulators have grounded 171 of Boeing's 737 MAX 9 aircraft and ordered inspection after the Jan 5th incident. To read more on this, you can always head over to ndtvprofit.com and we will give you a lot more in terms of details. And on that note, it's a wrap on this edition of All You Need to Know. But don't go anywhere. India Open is up next. Stay tuned to NDTV Profit.